Hey, good morning, everybody. It's Hammer. Today is Tuesday, November 25th, 2025. I, of course, am Hammer, the founder of Originator Success, Grab and Go Social, and Rate Sensei. Mouth is a little slow this morning. Let me wake it up here. All right. So good morning, everybody. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time. If you're here this morning, say good morning. If you're watching the replay, do me a favor. Just give me a hashtag replay in the comments. Let me know that you were here. If you would like to join me live, it's the best way to watch the show, of course. You can get a text reminder, a text alert. You could sign up for those at hmmr.io/reminder. hmmr.io. That's the Hammer Solutions short code /reminder, or you could use this cool QR code over here and you could sign up for those. While you're signing up for things, don't forget, check out our daily email lock advice. You can get that free to your inbox each and every weekday morning. It comes from hammer@ratesensei.com. You can sign up at ratelockadvice.com or use the cool QR code. We've also got an awesome $7 a month text alert service. You don't have to spend $100 a month to be with the live charts and stuff. If you just want to protect your pipeline, know what's going on at the beginning, the end of the day, get alerts if you need to be locking, $7. That's all you need. Check it out. $7 at ratetextalerts.com. So let's go ahead and say hi to the live folks, and then we'll jump in and get started. Who do we got here this morning? Mike Tebow, Kenny Rivard, Mike Brown. Good morning, all. Nicole Semerad. Good morning, Mallory Fotiadis. Great to see you here as well. Who else do we have this morning? We've got my friend Yasmin Martin, Christy Resor. Good morning, Rob Smith, Mike Tebow. Let me see who I missed at the beginning. We got Randy Tickle. We have Angela here as well. And bear with me a minute. I am doing three things at once here. So anyway, who else we got? Let's see. I think that's almost everybody. So good morning, y'all. Great to have you here. Let's go ahead, jump in. I don't see any Ron Siegel telling us what happy events we got going on today, but that's okay. Let me clear this out of the way. Just moving some stuff in the other screen, and then we'll get started. Good morning, Peter Riley. All right. Quick recap what happened yesterday. Let's start there. So if we take a look at this chart down here, this is the 24-hour chart. Let me zoom in on that for you so we can make it nice and big. Oh, got to refresh the page. Can't scroll. All right, there we go. So taking a look here at this chart, when pricing came out, we were right around 101.07. 101.07. It's right about where we were when pricing came out. We were about plus 10 basis points higher on the day. Bips. There you go. That's not terrible. We're about plus 10 basis points higher on the day here. That's a good thing. Remember, when this chart goes up, that gives us a weird looking. There we go. Let's fix it. He's got a black eye, but we'll fix it. There you go. So that gives us a nice, happy, smiley face. Looks kind of evil, but that's all right. So we got a nice, happy, smiley face. However, we did not see any reprices better. Lenders generally were on the cautious side yesterday. I didn't see almost any reprices better yesterday. However, this morning you could see we're up a whopping basis point or two, basically flat on the day, but that's still higher than where we were yesterday. You know what that means? That means we're going to see better rate sheets. So rate sheets today should improve a bit more. Not seeing huge improvements. Again, very, very small. We're staying between 6 1/4 and 6 1/8 in this. I'm sorry, 6 1/4 and 6 3/8. In this range. Right before the Fed meeting, we had our best number at 6.13. After the Fed meeting, we jumped up about a quarter point to 6. We'll call it 6 3/4 or 3/8. So we were at 6 1/8 here, 6 3/8 here, and we've really just been hanging out there. We've seen some small improvement over the last few days. 6 3/8, 6 3/6, 6 3/4, 6 3/2. Today would be 6.3. I mean, we're just, small movements, small improvements here. No big thing, but at least a little bit stuff. Reprice risk on the day is low today. It's unlikely that we have to worry about anything happening. we do have a lot of economic data. Let me show you what's on today's calendar, and we'll look at that together. There's definitely a lot going on. Let me shrink this down again. All right. So, oh, by the way, I did not talk about it. So let me pull this over and we'll go there. The 10-year treasury yield, sorry, I hit my thing there. Here we go. 10-year treasury yield is 4.02. We're very, very likely to hit support at 4. If you remember, we spent just a couple of days back in October below 4. We were right at that 4% mark right here on the 17th. Then we dropped to 3.98, 3.96, 3.95. And then within a couple of days, we were right back up, flirted with it one more time below 4, and then right back up. So that is definitely something that we want to be paying attention to. I do think that matters here. So we do have some basically a resistance level, because you want to see the yield drop. So we've got a resistance level coming up here right around that 4. It means, again, these are just one more reasons it's going to cap improvement. It's unlikely that we see too much improvement anytime ahead of the Fed meeting December 10th. It's just unlikely. However, when we take a look over here, let me pull this over. When we take a look over here, yesterday was a big day because we broke above that 50-day moving average, and the blue line is a 25-day moving average. I find it to be a less reliable indicator, but we did break above that, and that is a big deal that we're back above that now. So anyway, let's get back to today's calendar. Let me move this over for you, and we'll go over what's on today's calendar. There's quite a bit on the calendar today, so let me pull this over. All right, so taking a look today, you had the ADP employment change weekly. Again, this is something I hadn't really seen before. I don't know if that's a new report. I'm going to have to Google that a little bit. And then we've got the retail sales today. Retail sales, looking for signs of economic weakness or if there's a strong thing. The producer price index, this is September's producer price index. So if we take a look here at the schedule of when everything is coming out, I didn't want that. There you go. Okay. So if we take a look here, today, November 25th, this is September's data. We're not going to get data in December. We're going to get, because October's data is basically washed out. So we're going to get December, which I don't know why we wouldn't get November's data. Like, what happened in November? I understand that October isn't there, but where's November's data? Maybe they'll put that on the calendar and it'll show up here and it's just not there yet. Maybe they haven't decided on that yet, but that's kind of weird to me that there's no, and why is it not? Oh, you guys can't see my November because it's over too far. There you go. Where's the November data? I mean, again, I know we're not going to get October data, but why are we not seeing November data? That puts us to January 14th. CPI inflation data release states. I think that had been the case when I looked at this once before, and I think I had said the same thing, that we weren't going to see inflation data till January, and then it popped up for December. So we do have that coming soon. Soon, it's about 3 weeks, so close to a month away. So, but it's going to be after the Fed meeting anyway, and not very helpful. So we've got nothing really going on until that Fed meeting is basically the bottom line. Other stuff on the calendar for today. If we take a look here, you got retail sales. We've got the producer price index. By the way, the producer price index already came out. If we take a look at here, this article, producer price index rises, but it was mainly on higher energy and food, which is non-core items. Core takes out energy and food. So wholesale inflation picked up in September. We don't want to see inflation picking up, especially even wholesale, because that is basically going to trickle over to consumer inflation is the idea. Producer price index rose 0.3 from a month earlier, excluding food and energy, which is core. The producer price index rose by less than forecast from August and climbed 2.6 from a year ago, the smallest gain since July 2024. So this is a good sign, something that the Fed is just, they're not going to give a lot of merit to it, but it's going to factor in a little bit. Now, in the meantime, let's hit the rest of the stuff in the calendar and we'll come back and we'll talk about the Fed in a minute. So, of course, we've got FHFA prices coming out today telling us what are the conventional loan limits, but that doesn't affect rates at all. You got some Case-Shiller data, the FHFA home price index. So we got basically these are the two home prices that we would deal with, the two reports. You got a couple of Treasury auctions this afternoon. But nothing to get super excited about here, and nothing that should cause a lot of concern on the day. Reprice risk on the day is low. No reason to expect any losses today. It should be a quiet day. Now, let's get over and talk a little bit more about that Fed outlook. So, taking a look here, let me make this a little smaller so it'll fit on the screen. Bear with me. There we go. Okay, come on. What a pain in the ass. All right, there we go. Okay. So taking a look here, let me make this so I can put it up a little bit higher. There you go. Come on, we'll get you where we want you. All right, so taking a look here at the Fed outlook. Remember, we have seen some really big swings in the expectations of a Fed rate cut. It was down all the way below 40%. So when it was down here, guess what happened? Rate sheets got worse. Told you that was what would happen. Now we have seen this bounce back up. That is one of the reasons why that has helped rates to improve. And basically, the door is open for cautiously floating. Although we shouldn't expect any big drops in rates, we could see some more improvements in pricing. I'm going to put that down along the bottom and get rid of the bigger one on the day here. So taking a look here, 85%. That is the highest we've seen in quite a while, almost going back a month, where we would have expected. Up here, we were at 92%. So a month ago, it was higher. Big drop. It was actually lower than that back down here, not quite a week ago, and it has pushed up. Yesterday, it was a little bit higher than where it is today. But I would expect to see that this is going to continue to rise. So especially we've got this happy article from our man, Nick Timiraos. And yes, let's see, we should be in a Fed. Let me see, calendar. And I don't want Calendly. Let me just put my calendar up for a minute. If we look here, no, we are not to the... If the Fed meeting is on the 10th, it'll be the Saturday before the Saturday. So we've got the 6th, we've got the 29th. So this article is before the Fed blackout period, which is actually kind of interesting. But I think it's Powell still whispering through Timiraos. Fed Chair Powell's allies provide opening for December rate cut, a divided committee, missing data, and a whiff of stagflation leave Powell to choose between two paths, each with drawbacks. Now, remember, the Fed has a dual mandate of maximizing employment and price stability, which is getting inflation to around 2%. Inflation is higher than where the Fed wants it to be. Allies of Fed Chair Jerome Powell have laid the groundwork for him to push a rate cut through a divided committee at next month's meeting, even though it could draw multiple dissents. So it's kind of funny that we're seeing so much drama around the Fed rate cut this month, but there is quite a bit of drama. The unusual level of division inside the Fed means that to an even greater degree than usual, the final call rests with Powell. To negotiate these stark divisions, Powell is likely to weigh two approaches, each with drawbacks. The first, cut rates as markets now expect. And that's what I think will happen. I think they'll cut in December. What do you guys think? Let me know in the comments what you guys think. Use the exquisitely negotiated. Look at Timiraos using ChatGPT. Exquisitely negotiated post-meeting statement to signal a higher bar for further reductions. If we do see a rate cut, it's going to be the last cut for a while. Now, are markets buying that, or is that what they're pricing in? If we take a look at January, again, right now, December, they're pricing that we would be at 3.5. And if we take a look at January, there's very little. There's only about a 0.25% expectation probability that we would get another cut below that. So markets are pricing in that they would stop there. That we would see that. So, and there are some arguments that the December and January meetings are basically, they could cut on either one and it would still do the same thing. So, but the second approach is to hold rates steady, reassess in January when officials have more of the employment and inflation data that was suspended by the shutdown. That approach could prolong public discord for another 7 weeks with no guarantee the additional data will resolve the underlying disagreement. So I think they're going to go ahead and cut it. Brian Reed, he thinks so as well. Brian says definitely a quarter point cut in December is coming. Ron Siegel said rates cutting, baby. 2 jobs reports between the December meeting and the January meeting. Yeah, we're going to have the, let's see. So BLS jobs data release dates. We will have a December 16th release. Oops, not now. There you go. And a January 9th. So we are going to have 2 jobs reports between the December and January meeting, like what Ron said. Good morning, Morano. Ron said, I wonder if Powell subscribes to NBS Live. If he does, he would know without the BS reports, labor is weak, an ADP miss. Retail sales, big miss. Retail sales control group, big miss. Does it sound like a strong economy? Only is in Powell's delayed mind. So yeah, it definitely, I think the argument could be made that we could use another rate cut. And of course, it won't be enough to satisfy the president, but it'll be what it'll be. Deep fried turkey at your house. Yeah. So Randy was asking, what's everyone doing for Thanksgiving? We'll come back to that. We'll end on that one. Ron said, Fed speakers are helping us. Several voting and alternates are stating weakening labor market is troubling and requires a cut. I agree. Great point, Ron. A lot of the Fed speakers out there, and some of them, like Williams, very important. And, that's been a big deal. So is the bond market closed on Friday? It's open on Friday. It closes at 2 p.m. Eastern time. And yes, nobody will be around. It's always a ghost town. There's very little movement. Everybody takes off on Wednesday and they're gone for the weekend. Nobody is going to be around on Friday, including me. I certainly won't be doing a live on Friday, and I probably won't even be doing an email. The texts will go out because the market is technically open, but that's it. There's really nothing there. Randy wants to know if you guys would like to share, where are y'all spending Thanksgiving? I'll share mine in a minute, and we'll come back to that. Jerry Avila says, with the amount of jobs data coming in December and January, I think we're safe to expect a Fed cut. I think they're going to cut in December, and if they do, I don't think they'll cut in January. Ron said we even had Mary Daly say we need a cut, and she's not voting now. Yeah, and isn't she up? Isn't she not continuing? If I remember correctly, I forgot who is leaving in the middle of 26. I thought that was Mary Daly. Trash can turkey. All right, so let's go ahead. We'll talk Thanksgiving. Let's go ahead and stop screen share. I think you guys can see my advice down at the bottom of the screen. I would continue cautiously floating, but I'm not looking for rates to improve much. When we look at the technicals, we're close to capping out on some things. It'll be quiet for Thanksgiving. If you want to lock something up because you like the rate sheets and you don't want to float it over the long weekend, you got a long enough window, then lock it. There's really not a lot we'd be leaving on the table. However, you lose Thursday, Friday, Saturday, Sunday. If you want to pick up a little bit on the lock window, it should be okay to float into next week, but we could see some pullback on Monday. There is always some risk. There's not a lot of risk today. I'll talk more about that tomorrow, Wednesday, about locking ahead of the holiday, but today into tomorrow, I don't think we have to worry about it. Sean, wife got the flu yesterday. You're feeling it today. Most likely Thanksgiving at home with takeout. Will feel better, my friend, both you and your wife, and hopefully that goes. She votes next year, Mary Daly. So who's leaving? Who's not continuing? I forgot who that was. Let's see. You got, brine turkey. Yeah, you got to brine a turkey. For those of you who don't know, that you just stick it in a thing of salty cold water. Grill on the Weber kettle with charcoal. Make sure you spatchcock that bird then, Tom. You got to spatchcock it if you're going to do that. Yeah, glad to have your daughter home from NYC. Good for you. I don't want to talk about NYC. Let's see. Who else you got? I am going to Austin, and Alex, my daughter. Austin, y'all, many of you know Austin. He is a big component of Grab and Go Social. He is he works for Hammer Solutions for me, and we'll be over their house in Charlotte. And my son and his new bride, his new wife, my daughter-in-law, I can say that now, will be there as well. So we will, and of course my mother-in-law will be there too. So we will all be there. Let's see. I'm looking to see what y'all were doing. Yeah, I know the October, November data will be released together, but it wasn't even showing up on the PPI. Um, that's what was weird. So I don't know if they'll put it on there if that's an error. But I know for the CPI, it's there. So Randy asked, where are y'all spending Thanksgiving? Feel free, tell us, where are you spending Thanksgiving? I shared mine, you share yours. Just looking to see. Mike Brownstein is having a deep fried turkey at his house with his children, significant others, and grandkids, getting a lot of help with others bringing sides and desserts. That's always fun. Driving a shuttle at Winter Park Resort to get your free pass. Winter Park Resort, is that up in Colorado? But good for you, man. Good for you. And awesome to get a free pass. Good way to negotiate that. So football day grilling at your house for Avila. Good for you, man. I hope you have fun. Should be some good games. What is it? Lions Packers? That should be a good game. Who would have thought? I mean, for so many years we've watched the Lions on Thanksgiving and they have absolutely sucked. It's fun to watch now. We've got that. You got Dallas. I forgot who Dallas is playing. I'll have to look at the stretch. We'll have that tomorrow. Angela, at your mother's non-traditional meal with steak and ham. Yeah, we do ham and turkey. We do the turkey for the traditional, but there. Pheasant hunting in Canvas. You held Thanksgiving last Saturday. Good for y'all. Good for y'all. So have fun and good luck hunting out there in Kansas, my friend. All right, I'm going to wrap up, y'all. Thank you so much for joining me today. Hope you all have a fantastic day. I will see you tomorrow. It will be our last show of the week. It'll be quiet, of course, as Dallas versus Kansas City. Thanks, y'all. That should be a pretty good game then. Kansas City has not been dominant. Dallas can surprise you. I mean, they came back and beat the Eagles the other night. So I think they've got a really good shot. Kansas City came back to beat the Colts, but I don't think the Colts are ever. I think the Colts are playing over their head right now. So anyway, all right, my friends, thank you so much for joining me. I will see all of y'all tomorrow. I hope you have a fantastic day. And that's it. Take care, everybody. Bye-bye.